right, on to the local market now. The JSE is trading higher today with the all-share index up 0.2% at around 85,428 index points. The rand is trading at 18.15 against the US dollar, 22.92 against the British pound and 19.09 vis-a-vis the euro. A quick look at the commodities. Gold is trading at $2,668 an ounce, platinum at $961 an ounce, and Brent crude at $73.61 a barrel. I'm joined by Lindile Margas. He's an investment strategist at ABSA Investments. Thanks very much for joining us, Lindile. So right now there's a lot of focus on the tensions in Eastern Europe. Is this having any direct impacts on the markets at all, like the oil market?
Yes, so we are seeing that having an impact on market, but global markets still remaining positive for this week so far, but it has had an effect on European markets. We are seeing European markets trade lower over the week. And then from an oil perspective, we did see oil prices strengthening today. But looking at the longer term outlook, we do still see that demand on oil does remain quite weak, particularly from a weaker Chinese economy. And that also countering some of the production cuts that we've seen from the OPEC perspective as well.
So while globally there are concerns about future inflation, given Donald Trump's anticipated policies, particularly around trade, here at home we've seen inflation come right down to a 4-year low of 2.8% on an annual basis. That's way below the Reserve Bank's midpoint of 4.5%. Do you expect that we're going to get an aggressive rate cut this afternoon from the Reserve Bank?
Yes, so the Reserve Bank is meeting today, but we don't expect an aggressive rate cut. We're expecting a more moderate rate cut of around 25 basis points. And we do expect going forward that the SARB will apply a steady cutting cycle. We did see inflation that coming in below what markets had anticipated and also lowering significantly from the previous month. However, we do think we are currently at the lows from an inflation perspective, and we do expect inflation to increase going forward, particularly with dissipating base effects from deflationary fuel prices also being coupled with with the impact of electricity tariff hikes and also uncertain global policy going forward.
I do hope that you got wind of some of our conversation with the Southern Sun CEO. They released their interim results, reporting revenue up 6% at nearly 3 billion rand and adjusted headline earnings per share up 31%. Just give us your take on how they've done in the hospitality sector. Of course, that follows the dreadful time of COVID.
Yes, certainly we do think the results are a decent set of results, particularly following the pandemic recovery. We did see a mid-single-digit rise within revenue and even stronger earnings growth. That earnings number being lifted by some debt restructuring within the company, so lowering their debt levels and also leading to lower finance charges in that regard. And we also saw earlier in the year the company introducing a share buyback program. So that all are lifting that earnings number. And then from the trading environment they're currently in, it is still a tough trading environment, but we are seeing increased travel demand, lifting the room revenue. So those coming in 7% higher. And we are also seeing the company implementing higher rates from a daily rate point of view and also seeing higher occupancy levels. Market reaction initially was quite positive to the news, but we are seeing the share trading quite lower. But on a year-to-date perspective, share looking quite strong, up over 60% so far.
Super. Lastly, retailer Mr Price, they also released interim results for the 26 weeks ended September the 28th, reporting total revenue of 17.6 billion. That's up 5.2%, and saying that they've gained market share over the period while also giving shareholders a whopping 3 rand per share dividend. Your thoughts?
Yes, certainly a strong set of results, particularly when you compare it to the retail operating environment. That has been tough on the back of a weaker consumer backdrop. So quite strong results that we are seeing from Mr Price, seeing high single-digit rise within revenue and even stronger earnings per share increases. So that's sort of highlighting the company's resilience in its business model. Most of the sales are based in cash, and that's where we've seen the growth of the company. So less of an impact on credit sales and sort of highlighting the impact of the higher interest rate environment that we're currently in. Company has grown their market share currently and have expanded their markets have expanded on their margins part, so that coming in quite good as well, and also increasing their store presence from that regard. Markets reacting quite positively to those results. So the share is up over 6% today and close to doubling on a year-to-date perspective. So markets quite happy with those results, positive numbers so far.
Thank you so much for your contribution today, Lindile. That was Lindile Malgas. He's an investment strategist at ABSA Investments. And